Good morning, trading world. It is December 21st, 2021, 8:32 a.m. and this is my pre-market outlook for the SPY. The title of today's outlook, a play on words. A lot of Christmas caroling. I've been hearing a lot of Christmas songs, and that's this Let It Snow song. Well, in this version, it's Let It Cycle. And that's what we're going to talk about today. First, let me start off by giving credit to the brilliant fund managers and their resolve to not quit. They have not given up on holding things up through window dressing. And window dressing is basically the act of buying things based on the looks and momentum of a chart, because something looks pretty and you want to be able to show your clients that they're in stocks that have great charts and that are up on the year. And all of this is in hopes to gain a bonus for the end of the quarter. So they've not only figured out or work hard to come in each day to figure out where to place money, what market caps to buy and how much of it to buy to kind of hold the market in place. And each day they come in and they figure out where to go. And you can follow this by coming in each day and doing a scan for stocks that are within 2 or 3% of their all-time high, and just follow the money from there. And each day you come in and you see where money is going with those. So they keep doing it, but it's inevitable. They keep buying and keep moving money here and there, and it's just prolonging the inevitable. Let it cycle. And if you're buying spreads like I am, give yourself plenty of time on your options, because this is cycling back and forth. We're into where longer term charts are trying to cycle. Everything above the immediate. So I'm going to place a lot of emphasis on the 4-hour view right now, especially if you're paying attention to indicators. Let those cycle on the 4-hour. I told a fellow redditor I would go into further detail on what I was watching when it came to the VIX. Let me bring up a chart on the VIX. Okay. This is the VIX. And one of the reasons that I said yesterday, wait and be patient, is because I saw coming into the morning, I know I said support, but this is more so about the gap. And when prices gap, it puts whatever the issue that you're looking at, it usually puts it into what I like to call an irrational state, because things that you think that are supposed to happen just kind of gets pushed to the side and doesn't happen the way that you think it would happen. And this is, if you look at anything that gaps and then you pay attention to the indicator or whatever you're paying attention to, it seems like it goes through this moment of craziness where everything is moving opposite of the way that it should when you reach these gaps. So in seeing that we open gap up on the VIX, my idea was to wait, be patient, and wait for the gap to fill before I decided to do anything. And during this gap, all that I did up here, I took off a few positions profitably, and because of this gap, I kind of felt like it would give me an opportunity to take profit and then put positions back on once we close the gap, and you can kind of look, because like I say, during this period things are irrational. So once the gap is closed, then I can start back looking at indicators rationally to try to figure out where things are going. But during that gap, it's impossible to get a rational look at things. So I tend to wait until either the gap is filled or I get confirmation that it's a gap and go, where if we get back to the low where the gap started and we decide to take off and we don't break that low, if we had found support here, then I would have continued on, and this would have been okay. Things are going to go this way, where we're going to continue to take off, and I would have held positions longer. But as soon as I saw that we were breaking that gap, it was pretty much evident to me that we were going to close the gap. So things were going to be irrational for a while until we closed that gap. So that's one of the things that I was talking about yesterday as far as looking at the VIX. And then the other thing that I look at, VIX has a way of letting us know whether risk or trouble is near right now based on something called backwardation or Contango. Contango is the normal way a risk curve on an issue should look, where risk is greater the further out in time you look at it on the curve. Let me see if I can bring up an example. All right, what I've brought up is product depth on the futures volatility contract. And this can be looked at as a risk curve, where you have the closer date, which this is the January 22nd contract. This is the February 22nd contract, February 22 contract, and this is the March 22 contract. And as you can see, the further we go out in time, the higher the price or the higher the risk is. But what could happen, let me get some drawing tools up here. This changes as price changes on the VIX. And what could happen is that you get to places where you get into backwardation, where this contract price is way up here, this contract's price is down here, where it's at its highest right now. And what that means is trouble or risk is right now in the present. So that's backwardation, when the risk curve looks like this, where the highest price is closest. But right now, as it stands, this is Contango. This is the normal way that it should look, where it's higher, or risk is higher, the further you look out. So that's a way that VIX lets us know. Now, there's a better way to look at it. I don't really break this condition out. There's a certain chart look that I use. I don't really break it out often. It's only in very high volatile conditions that I bring it out. And let me bring that up. All right. With the VIX up, what I would do, I would bring up the comparison indicator. And in the comparison indicator, I load the 9-day VIX, the 30-day VIX, and 3-month VIX. And what this does, it gives me a better look at backwardation and Contango at the moment. And let's go in for a closer look. All right. The red line here is the 9-day VIX. And as you can see here, it's at the bottom. They're in Contango at this point. But as you can see with the gap overnight, it put us into backwardation here. And when we went into backwardation, let me change this to the spot. I don't know why I did that. Okay. This is a much better look, because if we're looking at the VIX, the higher it is, it makes it look backwards. But when you're looking at regular issues like the SPY, we can go here and see where the bottom actually happened. So as you can see here, we were still in Contango up here, where price is moving higher. The shorter term VIX is still on the bottom. But after the gap down, you can see where the 9-day VIX, or the shorter term VIX in the red, jumped on top of everything. And then here, when we got to a very low bottom, you can see where it really separated itself from the other cycles of the VIX. So the short-term VIX is definitely higher than everything else. And as we go on, you still have a day where the short-term VIX was above everything else. But as it came down and recrossed back below everything else, we started making a bottom. And here you see where the absolute low was. The shorter term VIX again spiked above everything else and came down. And once we get that cross back below, where the shorter term VIX crosses back below everything else, that's a sign of a temporary bottom. as you can see here, when it crossed back over and started to operate back to normal, you can see that that was the bottom. So that's how I usually use it in moments of very, very high volatility, to search out and see whether it's a bottom and see whether I want to take off positions or whether I really want to sell premium in certain instances. Now, let's get back to the SPY, and I'll do the key levels to watch for today. All right, here we have the key levels for today, starting with resistance. Jack resistance is going to be 459 through 461. Queen resistance is going to be 463 through 464. King resistance is going to be 466 through 467. Jack support is going to be 457. Queen support is going to be 454. King support is going to be 451 through 448. When we get into moments of volatility like this, it gets very hard to pinpoint levels. This is why we have ranges right now, because we have a penchant to overshoot levels with volatility being so high and energy moving so rapidly between different chart looks. So these are the levels that I'll be looking at today. Something that I'm kind of preparing for, or a look of something that may happen at some point today. Imagine we're going to think about momentum, and that usually when you think about momentum, you think about when you throw a ball up, or let's say you roll it up the hill, and usually what happens is that ball gets slower and slower until it basically comes almost to a rolling stop, and then it starts to reverse and come back down the hill. That's how momentum normally works. But when we're in such a high volatile condition, I kind of picture volatility working like this between the different time frames. It's more like the dog on the chain. You ever see one of those really mean dogs on the chain, and how he'll want to get to something and he'll back up and he'll take a running start and whang, the chain will yank him back, and then he'll go at it again? That's how momentum is going to act in these conditions. So in certain time frames, momentum is moving up, and we'll get to a point where momentum is moving up, and then quickly we have this boom, this downshoot, and then that dog, just like the dog, even though it got yanked and almost choked to death, it'll get up, back up, and it'll try again. It may be a little bit of stretching the chain or whatever it's the leash that it's on, gets a little bit closer, and then bam, it'll come down again. That's how I'll be looking at momentum to play out right now. So with that being said, let me set up how what I would be looking for today. All right, coming into today, this is somewhat how I see things, or how they may play out at some point today. Keep in mind the analogy of the dog on the chain as he's trying to reach for something, but that chain is just stopping him. So I look for us to get back up here somewhere, and then boom, we're going to have a quick drop, and then we're going to try to come back up, reaching a little higher, and then boom, we're going to drop. We're going to drop lower. Now, to see these rhythms and cycles, it's going to be very important that you pay attention to the 4-hour chart, because when we get the real drop, the biggest drop is going to be at the time that the rhythm on your 4-hour reaches an overbought state. So if you're watching an RSI, pay attention, because you're going to see these small rhythms happen. You know, paying attention to your shorter term time frames, your intraday time frames. But just remember to keep an eye on the 4-hour, so that when it reaches a level of overbought, understand that that's when we can see a bigger drop and come back and search out for lower levels. So that's pretty much what I'll be looking for today. I don't really expect a full break or correction until next year, because these fund managers are doing such a great job in fighting for these bonuses and trying to hold things together. But I do expect a flush out, which I'm watching for to happen at any time, and that's just where we probe the lows here into this 451, 448 area, and possibly below. But I don't see a full correction happening until next year, the start of the new year. So also, if you pay attention to what I do, normally I only trade the first half of the day. So when you see my day maps, I'm usually only drawing for the first half of the day. But in situations of high volatility, I will stick around for the entire day. But right now, during the holidays, I'm kind of torn, so I don't really do a lot the second half of the day. But I hope this helps. And as always, know your risk, define your risk, and wishing you a successful trading day. Happy holidays. Have a great one.